Hi, everybody. So this is Lance from thetatraders.com here. I'm just going to quickly go over how to set up trades for consistent passive profits. And I'll do this on Thinkorswim and on Tasty Trade because I know some of you guys might use Thinkorswim as well. So I'll have a little bit of both. Got another one joining in here. Let me share my screen real quick. All right. Can everyone see your screen? If you just give a thumbs up. See my Thinkorswim here.
I can see it.
All right, sounds good. All right, so first thing you want to do is go to the trade tab on the top left. I'm going to type /MES. You can also do ES if you have a large account. I'll definitely recommend MES at least the first few times just to get used to it. And then if you like the strategy a lot and you have a large account, you can go to ES then. Then on the option chain, you see these little parentheses. We did the one that's 25 days out, and I posted that yesterday when I said DT 26 days. So a day later, 25 now. Just click on the little arrow here. And I set up strikes to all. It's a way in the setup here, if you don't see that at first, to go to your application settings and have all your strikes, because we go so far out of the money on these. You want to make sure you can see the strikes. Forgot exactly where it is, actually. It's one of these. If anyone in the chat happens to know how to make all the strikes come up, it was definitely one of these buttons. Forgot where it was, but I'll look it up later. Anyway, so you want to have all the strikes here. It might default to 10 or so. So you just click the all as well, and then you'll be able to see all the strike prices really, really far out, close to the money and whatnot. So we did, let me see the exact trade. I think it was 41.60. Sounds about right. Yeah, Delta 0.06. So it didn't really move too much. So you want to go to the 41.60 line right here. And then on the right side of the screen, you have your bid and your ask. Typically, you want to start by clicking on the bid. So just left click here. And then it'll say selling -1. And you'll have your expiration date. I did 41.50 by mistake. You go 41.60. And then selling the put. And then you have your price, the natural to the midpoint. You want to try near the midpoint if possible. Sometimes you might happen to get filled. It gives you a little extra money there. So you'd go up near the midpoint first, so around 5.5. Limit, day, best is all good. Confirm and send, and then send it away. I'm on a paper trade right now. I don't know if it'll necessarily fill right away. You could check on the monitor tab here. Yeah, I don't think Thinkorswim says accepted first, so it might take a minute or two, and then we'll start to try to get filled or not. Does anyone have any questions on Thinkorswim for how to fill the order? You can unmute your mic. It was all good? You know, pretty straightforward. It's just like you're selling a stock. So if you had any type of stock like SPY or something like that, it's the exact same steps. So you don't want to think futures are this new language that are hard to decipher. So let's say I wanted to sell a 405 put on SPY. Just click on the bid, just like before. It's the exact same steps, okay? Now going back to this, you want to look at the buying power that it's needing. And this is my paper trade account. So I have no other futures positions on in the paper trade. You'll want to look at the buying power effect. This could be a little different depending on if you have other positions in play. So if you have like calls that you're selling and strangles and whatnot, it could be a little bit different. But I tend to look at this number knowing that there's no other trades going on in this account. So that's a good standard number that a lot of people can work with. In general, $1,000 is typically more than adequate for these trades. If you're doing one contract, leave 621 is your initial buying power, and then about 400 or so in cash. One of the keys, as I said in a lot of videos, is you don't want to use more than 50% of your buying power. So if you have a $10,000 account, don't use more than 5,000. Okay. Now we'll look at Tasty Trade as well. It's pretty much the exact same steps. Click on the trade tab. I'm going to type /MES. Then you go to the DTE, it's 25 DTE, just click it. When you see I already have 3 positions there, and you just click on the bid. We'll click right next to it. But it's not letting me, but you click on the bid there, and then it'll be the same exact order and same screen that you see there. Okay. Any questions on how to set up orders from anyone that's relatively new to these?
Well, I had a question about buying power.
Okay,
Not actually. So I entered your Sunday trade yesterday on Tasty Trade, and it's in an IRA.
okay,
And so I was expecting it to reduce the buying power because I just did one contract.
yeah,
Um, so I expected it to reduce the buying power by about 500-ish, but Tasty Trade said that it was going to take like 1,000 to 1,100. I can't remember the
yeah,
exact amount. I wonder if that's because it's an IRA.
yeah. It's exactly because it's an IRA. They're a little bit more stringent on your buying power requirements because it's an
Okay.
IRA. Then you can't get to like a negative account. So that's why it's a
Uh-huh.
little bit higher in the IRAs. Just unfortunate. One of the things you could do is use a little less in cash on the side because of it, because you're already using
Okay.
$1,000 or so. If you have
Yeah, that's
about
what I was wondering about.
yeah, if you leave like $200 or $300 on the side, you're probably still okay in most cases.
Okay. All right. Thanks.
Yeah, no problem. That is one of the reasons why I don't do these trades in my regular Roth IRA because it does use up more buying power. It still could work out fine. It's just your total returns won't be as high because you would have to use a little bit more cash. But it's still a viable strategy in IRAs.
Right. Cool.
All right, so I'm going to leave it open for any questions on strategy, how to actually look at your trades, how to monitor them, possibly close them early. I'll just leave it pretty wide open here. So just feel free to unmute your mic and we can discuss it.
On any of your trainings or videos or anything, do you teach how you pick your strike prices and that kind of stuff so a person could learn how to do it as well?
Yeah, if you look at the Discord where I put the alerts down, I did a video pretty much every week so far where I put a video on the Discord. You just press the play button. So if you look on the Friday, September 15th, I posted it around 3:30 in the afternoon. And you just press play. I talk about why I picked a certain strike there. Most of it, since it's so far out of the money, I'm looking at recent support or even further out support. Since we're so far away from it and there is a recent support, I think about 150 points or so, but that's still not anywhere close to our sold put. And you would have to go almost 6, 7 months out to see where the last support level was. So that's one of the main things I look for these. Really not much to it besides doing that. You could also look at some basic technical indicators, like if we're, exponential moving average is trending up, if RSI is trending up, things like that. I might be more willing to go a little bit closer to the money, but I usually look for around 5 to 7 or so premium, and it usually ends up being 0.05 to 0.07 or so delta in most cases.
And you said that was in the futures
Yeah, so
tab that you put that video.
so go to Consistent Passive Profits channel where I do the alerts each week, and I posted the video idea for the reason why I picked that strike. Any other questions? Mic is open whenever you have any. I feel like I'm the science teacher where it seems like all the students they're like, yeah, I get it, I understand this, and then they're just being like kind of shy. I'm not sure. Maybe you do all get it.
Well, you've been putting out some good training videos, so at least I've been watching those,
Appreciate it.
so I have an idea.
Yeah, a lot of it could be overwhelming at first when you're looking at all these different trades, especially if you're looking at the lifetime membership where there's all these different strategies that I'm doing. So if you feel overwhelmed, like it's pretty common. Like don't be freaking out. Like there's way too much to look at and all that. Definitely ask questions. You could ask in the group. You could ask one-on-one. Many different ways to do that. I'll show you a few basic other technical indicators if there's no other questions for now. Does anyone have any general questions for
I got a question.
that? Okay.
If you're, for example, if your trade, if the market started dropping, would you rather roll it, or do you just do say ×2 loss? What's your
Yeah.
preferred method?
Good question. Me personally, I don't do stop losses on this strategy. I will do stop losses on other strategies that I post on strangles. I have 112 strategies and whatnot. But these are so far out of the money that I don't mind getting assigned at that strike price in pretty much every case because MES is up here. We're selling puts really far behind it and lower. So I believe that there's a good chance of mean reversion if we got assigned. I'll typically roll it one time, and I'll typically roll it if it touches in the money at any point. So let me share my screen on that and explain a little more about it. This hasn't actually happened yet in a year and a half. So right now we're at 45 and 4,500 and change, all the way down to 4160, where you just do the math here, starting at 4,500. Subtract the 4160, and we're 340 points out of the money. So figure out the percent out of the money, just do 340 divided by that 4,500 that we're currently at. And we're looking at a 7.5 or so percent drop in 25 days, not even a month. So if that happens, it's going to be a pretty dramatic downturn in the market. I'm not saying it can't happen, but it's very unlikely to happen. So if it did drop 7.5% in a month, then there's a good chance that it might stay where it is or possibly bounce back at least slowly after that. I will try to roll once out at no net credit or debit. So what I mean by that is if you look at the 4,500 strike, it's currently going for 54 premium. If we got down to the same in the money 4160 with 25 days left, that premium would be pretty similar in the end. It would actually be a little bit lower because it's not going to drop immediately in one day. Like it might take a few weeks to get there anyway. But let's just assume that it was around 55 or so premium. What I would do at that point is I would buy the contract back and then go another month out. So 25 plus another month, about 60 days. And I would try to sell a very similar premium around 55. So we can see here, and again, the numbers are going to be different when this actually happens, but I could go down to around 4,400 instead of the initial 4,500. So I'll be actually being 100 points lower and not get any credit or debit because I'm getting the same premium selling the new one than I did to close the first one out. And then if this one, the 4,400, happens to not go in the money and expires worthless, then you're out of the trade already. If it does go below 4,400, at this point, I don't mind getting a sign because then I got another 100-point drop and I'm even in a better position to wheel the strategy out where you would own the contract and then sell calls against it. And again, that hasn't happened yet in a year and a half. It's bound to happen at some point, but when it does, obviously I'll be on Discord explaining exactly what I do. And you could actually do some interesting things there by selling the calls at different strike prices. Like if you sold a call at the same strike, let's go back to around a month again. So if you sold the call at 4,500, let's say, you could get 50, 60 premium for the next month, which is a really good return. And all the market would have to do is maybe recover a few, 20, 30 points or so possibly to take in that enormous premium. If you think it's going to bounce back and actually recover and go up, you could sell a little bit out of the money calls. You sell like 100 points higher here, you're still getting good premium, about 20 premium. That's 20 times $500 right there per contract. And you can make 100 in your actual contract because remember, you might have been assigned at around 4,500. If you sell a call at 4,600, you'd make 100 gain, 100 times $500 more if it happens to recover. And then you could even go even safer and sell a little bit in the money. So if you sold, let's say, a 4,400, you're taking in 130 or so in premium. If that gets called away, you do lose 100 points because you're selling a call below where you got to sign, but you're getting 132, so you're still making about 32 in premium anyway, and it's a safer play because you're selling in the money. So just a long story short, there's a lot of opportunities we could use to manage these. There's not one specific way. It really depends on what the market's doing and technical analysis and all that. Does all that make sense? It's a little bit more complicated.
Yeah, that makes sense.
And that's one of the strategies I'll do in the covered strangle strategy, where like I'm selling higher deltas, taking more premium, and I don't mind getting a sign on those because I'm willing to sell calls against it. And then in terms of where you sell your calls, you can sell in the money, out of the money, at the money. There's a lot of options there. Bad
Hey,
pun.
this is,
Go ahead.
oh, sorry, Lance, go ahead.
I just said bad pun instead of options. So
Oh.
go ahead.
So this is Glenn. I had another question about assignment. I'm just thinking about a a black swan crash or something, and a multiple contracts get assigned, and I guess let's use Tasty Trade. They've got to loan you money to fulfill the assignment. So I guess you're going into margin, right? Is that what you call
It
it?
depends, maybe.
Okay. I'm just wondering, yeah, if you're in the negative, well, I guess if they had to loan you money to fulfill your assignments, are they going to liquidate your positions right away before you have a chance to sell calls?
Theoretically, they could. Yes. So one of the things to make sure that you're doing is using no more than 50% of your buying power in your trades itself. So $10,000 account, they'll use more than $5,000 in your buying power. If the black swan happens right at that point, there is a chance you could get past the $10,000 and you might have to forcefully like liquidate a trade out, or you might have to add more money if you could, but it's very rare and it hasn't happened to me in years. It hasn't happened to any traders I know. The people that have trouble is when they go higher, like 70, 80%. Another, let me explain that to you so a little more.
What did you pay for that?
Like 800 or something.
How much?
If one of you could mute your mic, please. Thank you. All right, so look at just buying an MES contract outright. So I'm gonna buy just the contracts. That's using about $1,200 in buying power. So it's a little bit higher than the $1,000 or so that I recommend, but it's not dramatically higher. If you happen to have a lot of contracts and the black swan happens and the market drops like 15% in a month, yes, you would probably have to liquidate a few positions at that point. So if you are really concerned about those, you possibly want to do a stop out at around 3x premium and just get out of a few of the contracts possibly. Or if you're able to put in more funds, you might have to just deal with the margin requirements. That all make sense?
Yes, thank you.
Yeah, as Matt says, and he's been a veteran here. Listen about your BP. It is very tempting to do a lot of contracts because these work so well. So $10,000 account, maybe I'm going to sell $9,000 of MES contracts, and then a slight move happens, you will be screwed. Like there's no way around it. So don't get too greedy trying to do way too many contracts because it seems so easy. Like sure, it might work out, but it might not either. And we're trying to be very safe here. So again, good rule of thumb, 50% of your buying power, no more than that.
Yeah, good reminder, Lance. I've got to get rid of one of my ES before the FOMC stuff. So I do tend to go more than 50% of my buying power. I am aggressive with it, as you know, and I do tend to get better returns, or maybe better returns than other people would with this. And but I do watch things carefully. So I'm at 80% profits on one of the ES I've got. So I know there's some volatility coming up. Probably going to take profits on that very soon. To try and mitigate that risk. So you can like actively manage it if you are being more aggressive with your buying power. So it's a good reminder though. I mean, I think I'm like 80% of my buying power at the moment. So I'm going to try and ease that off a little bit as we go into the week.
Right. And that's a good point. Like if you're adding in these trades every week, even if the market drops a bit, there might be some trades from the few weeks ago that are at a decent profit already. So you could just close those out and then you'd be automatically opening up your buying power anyway that way. So that is a consideration if you're a little bit more active, where you could just take out some trades that might be at a slight profit anyway, and then you could open it up a bit. So there are ways to boost these returns. If you want to be a little bit more active, closing out early, entering in a new one, things like that, which I do a lot with the lifetime channels on strangles and 112s and whatnot. Good questions so far. Matt, you wrote another thing in the chat. If you go above, make sure you have a good understanding of the buying power, how span margin can move. Yep. Span margin can move two main ways. One is if it's going closer and closer to in the money on a strike. Let's say you were 400 points out of the money and now it's 200 points out of the money. It will use up more buying power, even though your trade is still most likely safe anyway. And also, if the VIX increases, that's your volatility in the market. Right now, we're in a very relatively lower VIX, around 14. If that shoots up to the mid-20s, which could happen relatively quickly at times, that would increase your span margin, even if like your actual trades are not challenged and they're still far away from the money. So I know it's a little bit more advanced here, but if you're at a higher VIX environment, 25, 30 or so, there's a good chance you could actually enter a little bit more of your buying power, because there's a good chance the VIX will drop, which will naturally help your buying power anyway. With the VIX being so low right now, if you want to be safe about it, you probably want to use a little less than 50% of your buying power. Just if you're worried about VIX expanding and getting to the mid-20s like right away. I know Tasty Trade recommends about 25 to 30% of your buying power right now. I think it's a little bit too low to like really get decent returns. So I'm still around 45, 50% anyway, but that's just my opinion on it. Any other questions, thoughts? YS, do you have any questions so far? I know you just joined. Mic is open. If you have any questions, now's a good time. Still have about 15 minutes. Russell, is there anything else you want to add about how your trades are going and your journey so far?
I'm loving it so far. So yeah, for guys that don't know, obviously I've known worked with Lance for a while, but he really introduced me to this future strategy 4 months ago now. I think it's probably 4 months.
Yeah, about that.
And I love it. I think it's fantastic. It's a lot of fun. I just see Josh just joined us all. Hey, Josh.
Hey, how's it going?
Hey, Josh, another veteran option seller here. Been with us a few years now. I left it open for Q&A, but there's no other questions. Josh, you want to put in a few words about your option selling and how you've been doing so far?
Yeah, I'm doing pretty good actually. So, obviously you know this, but I started out probably selling options around April, and in just the last let's see, I guess it'd be about 5 months now, I've increased my account around 15%. Haven't been too aggressive, been staying pretty steady on it and stuff, and taking a few losses, but following the plan. So that helps a lot. And so that's really great returns. And I'm on track for, anywhere from 25 to 30% just this year, even though I started just in April. So,
and you go relatively lower on your buying power too. So you want to be safer about it.
Yeah, exactly. Yeah. Normally I'm around anywhere from 30 to 40% buying power.
Mm-hmm. Are there any general tips for a lot of new members that are doing these for the first time that you remember doing when you were first starting out?
So obviously, just don't go overboard on trading. I mean, it's just important not to get too aggressive, because a bad down day could really get you if you're too aggressive. And then just sticking to the plan. It's hard to not over trade, and you definitely you want to trade as a trader. So it's you got to hold yourself back from placing that extra trade. So
That's almost exactly what I said about a minute before you joined.
yeah, sorry, I was busy. And then,
That's all right.
but yeah. And then like, of course, I know this is for the passive profits and stuff, but I really like doing the um variety of trades, sprinkling in some gold. I mean, I'm mostly MES, being honest, but I'll sprinkle in some oil and gold in there as well. So,
Yeah.
and I think I've done one corn. So those are always good to kind of diversify the trading. You know, you're not holding on to it, but it still diversifies the trading.
Yep, definitely agree.
So,
And Matt's also saying, look into writing a plan at some point in terms of how much funds you're going to use, when you're going to enter your trades, what deltas, when do you get out of the trades, and then follow that plan is very key. So a lot of people write the plan out and then they see something happening in the market and they're thinking this time it's different. It's probably
yeah.
not.
Well, and I want to get a little more advanced on it, but another thing that's helped me is kind of like putting in notifications of when I'm going to place the trades too. So like,
Yeah.
so I want to get it a little more lined up in my notification so I know exactly the day, but I got a good start so far. So,
Yep. I do Google Keep. If you use that, it's a free app on Google. You could put reminders like later on in the future. So I have a reminder every Friday at lunch, do my strangle or my 112. So when I see it come up, like, oh yeah, I remember. So I'm gonna post it. Cody asks, how do you calculate buying power for the rest of your trades? The simple answer is if you're doing a lot of different strategies, don't use more than 50% of your buying power. So if you have, again, $20,000 account, don't use 10,000 or more than 10,000 in your buying power. It's a little more complicated than that at times, but that's pretty much all I do anyway, as
yeah,
well.
one thing I look at personally, and I don't know, is like anywhere from 2.5 to 3x is what I'll do for actually keeping the buying power on the side compared to what's listed on like Tasty, if that makes sense. So
Yeah.
like if it says, I don't know, just an example, $400 buying power on Tasty Trade, I'll either leave anywhere from like 1,000 to 1,200 for that trade. So
Right, which is fine. You want to be safer about it, not worry about too much on these things. So definitely works for you. There's nothing wrong with that. Yeah, it does depend on the strike and Greek factors, yes. Implied volatility and your deltas are the two main factors. But there are a lot of hedging strategies you could do. So I do a lot of 1-1-2 trades where I buy a put debit spread, but then I sell to puts behind it. The put debit spread is a natural hedge. So if the market's dropping a bit, your buying power won't go up as much as if I didn't have that put debit spread. You could just simply buy a put at a really low delta just because we could deal with like max loss scenarios and whatnot. So it's like a cost of insurance pretty much in your business. You could buy a 0.02, 03 delta about 2-3 weeks out. So if the black swan happens, that would make a lot of money and at least offset some of the losses. But there's a lot of interesting things you could do there. I
Yeah,
know
Lance.
sorry,
Sorry, I was just gonna say I do have one of the put debit spreads you had me do a while back still on, so that's probably contributing to the fact that I'm able to go
Right.
as aggressively as I am on
Right.
these trades. So, but is there a way to quantify it? Like, is there a simple way to say, hey, if I have this spread on, then this will help my buying power by X amount, or is there any way to kind of think that through?
It's a bit complicated to figure that stuff out. One of the ways that you
Yeah.
can look at is when you go on the trading tab. I'll show you real quick. We only have about 8 minutes left. So this is on the desktop version of Tasty Trade. You could put in your trade, even with the debit spreads and the hedge and all that, all in one order. Even though you won't fill the order right away, you could still at least see what the buying power effect would be. And sometimes it's weird, like you're
Right.
buying a put or you're buying a debit spread and your buying power goes up instead of down. That's because of the margin requirements. So here's a quick example. So backslash MES. Let's say I was worried that a black swan event's going to happen and the market's dropping like 10% in the next 2 days. I could buy 0.02 or so delta. I want to click on the ask to buy it. Or I can just do +1 instead of -1 here. Nah. This thing's in the way. Let me see. I'm so not used to buying. It's not. Let me give me 1 more second. Okay. I keep clicking on that. Why am I doing that? I'm so not used to buying. Click on the ask. All right. So now I'm buying a 38.75 put. It only cost me 2 in premium. If you do review and send, I get $300 more in my buying power back, even though I'm buying an option. It's very odd. Like if you're used to doing stocks, you wouldn't see that. You would see, oh, well, it's gonna cost me a little bit because I'm buying the option. It's increasing it because if the market drops a lot, this particular option will be worth a lot more. So it kind of offsets a lot of the other trades that I have. Does that
That's
all make
fantastic. Yeah, thanks. That's really helpful. I think
Yeah,
that-
I know some traders that will do this pretty much with whatever their account is. They look for the max loss if the black swan happens, and then buy a few of these really, really low deltas as a hedge in case it drops a lot. It's essentially insurance, cost of doing business. You know, like you have overhead, you have your insurance in your business. It's the same idea. It's going to lower your overall returns though, because there's a very, very unlikely chance that this would actually be worth anything. But at least it's an insurance policy.
Yeah, that put debit spread's gonna probably lose me money by the looks of it, but it's only
Yeah.
$50. And to
Yeah.
have that extra security in there is worth it, right? Because $50 is not
Exactly.
much compared to the $200 per ES or whatever I'm getting them.
Exactly right. So you could do put debit spread, you could buy a put, you could do an iron fly even if you wanted to. We did one the first week that we started because the market dropped a bit. Remember that was another hedge that we did. So there's a lot of strategies there. That's pretty much like when the situation pops up, ask me and then we could look through things. All right, about 3 more minutes. Any other quick questions? Don, any quick question there? All right, I guess we'll just end the meet at this point. Thanks, Matt. Thanks, Josh, Russell, and everybody else. And again, if you have any questions, let me know one-on-one. You can just DM me, or you could ask a group, and then you could hear other advice from other members, whatever you're more comfortable with. I know some people like to just talk to me, or some people like to hear from others as well. So whatever makes you feel comfortable about it. All right, everybody, have a good evening, and we'll see you on Discord.
Great,
Thank you.
All right, bye, guys. I'll post this on YouTube soon, whenever it uploads. All right, bye, guys.
Bye, everybody.